Welcome back to the Sunday Stock Talk, where serious investors come here to prepare, and we're looking at the top AI stocks that you need to be watching for this week. Now, preparation is everything. 80% of your short-term trades will be determined by how you prepare the night before. So we're going to jump in and really look at some things. We're just getting back from a trip, and we're in LA. We're going to Northern California tomorrow, but we will be live at 6:30 a.m. if you want to tune on in to the live session at Market Open. It's the second link below. And yes, a lot of people asked about bringing back lifetime access, and I don't know how long it will stay open, but it's there for now. So feel free to have a look in the second link in the description. So we're going to go over the top AI companies. We're going to jump over to the AI list of large language models and AI companies. There's a lot of companies to watch here. We definitely have a pretty fast growing list, and we do see some movements here. Robinhood is up about 8.5%. They just got added to the S&P 500. We also have a partnership with Robinhood where sometimes you'll see ads there in our collaboration there with Robinhood. And so I like Robinhood personally. I use them quite often. That's where we're doing the analysis. But one thing to note is AI companies are really where we're seeing a tremendous amount of growth. So that's where we're going to focus today. Carmen says Open Door is up and will be up all week. That's an interesting prediction. Carmen, what makes you say that? How do you see that they are up now? Eric says, what's up, Will? What's going on, Eric? Good to see you. And what's up, chat? Saver the Sky says, what's up, Richtech Robotics stock? All right, we could take a look at some of those. Thanks for tuning in here. Let's jump right in. So the first AI stock that I have on my list that we're going to be watching this week is going to be CTM. CTM is a defense company that is pretty small, and they are also higher risk than most companies that we cover. We see them build a market cap to over $100 million recently, and if we take a look at some of the drawings, we've seen this really consistent growth over the last 8 to 9 months, where they've really built this market cap. Recently, we've been holding long-term positions from around 87 cents a share, and then we also have some shorter-term potential trades we're looking at for CTM this week, where we've seen it build some momentum. Now, one thing to note, over the last few days before we closed out market on Friday, on Thursday, the highs of Thursday were reached and surpassed on Friday. So going into Monday here, we do have some uptrends. We do have a little bit of a potential for maybe we see a sell-off at market open. That's quite possible, as that normally happens. But we are going to be looking still for, based on what we've seen from the last two trading days running into Monday here, the probability that there would be a push up in the markets tomorrow at market open would be higher than in other instances due to the trend that they're developing in the market right now. So we're going to keep a close eye there. CTM, you see Carmen responded to that thing on Open, says Open is a meme stock. Now the volume is over 500 million every day. That's pretty cool. Yeah, we don't trade meme stocks here. Main focus here is going to be value, and we're going to actually jump into why that is. CTM is going to be a company processing large amounts of data for the US government. They have some contracts that have put their current contract values over $100 million. They just signed a $100 million contract earlier this year, and they continue to add to some of their backlog, as well as looking for moving into agentic AI for the government. They focus on software development, cybersecurity, and they also are in kind of like warfare tech, I guess you could say. They are a defense company, and that's where they focus. You can see digital communications, while they're an information technology company. They work with, for example, Naval Air Systems on that $100 million contract. Now, the reason that we bring them up and why we like to trade them and have long-term positions is because of the current valuations to how their financials look. So if we go and we trade meme stocks, which we don't do at all, you'll oftentimes see people sharing those stocks, and the actual intrinsic value or anything close to analysis of the fundamentals is pretty far off if they're just trading on hype. When we're looking at CTM, we do see that they've had really consistent increases in revenue over the last few years. And quarterly, they're also seeing some increases with revenue of about $14 million per quarter, with revenue up about 21% year over year. They are seeing some of this momentum from AI. And so, with the balance sheet where it is, this also looks pretty good. Annually, they've seen their balance sheet increase, with total assets surging to recently $43 million, with liabilities at just $11 million. So they've really kept that balance sheet disciplined, with their year over year assets rising up 47% and their liabilities down 32%, which is good. So financials look good. The news has looked fairly good. The only thing that's holding them back right now is the biggest contract that they have, that $100 million, which is currently larger than their market cap, which is also a good indication that they could see some growth here, is that contract was linked to the CEO's previous job. So previously, the CEO worked in the Naval Air Systems Command area, and this was actually this special missions division of the government where they just signed this $100 million deal. So one of the questions is, okay, can they continue to see growth not just from a deal that maybe was just brought from the CEO due to prior connections, which that's fine, but we want to see more. Now, one of the comments here from Johnny says, let's go CTM. Eddie says, hi, Will. Hey, what's going on, Eddie? Thanks for tuning in. Spawn FH says CTM is manipulated very easily, and I will take profit on any jump, says Spawn. Yeah, it's definitely why, I led here with, I urge caution. It's at $100 million market cap. So when we see the chart where it is with this potential bounce into these levels of, let's just say conservatively from where we've been watching, we're looking for this 20% swing, which we did see that bounce on the support. Now we see it start to maybe continue up, and we're looking for this 20% to 30 or 40% increase on CTM as they've been building their market cap. That is really not a lot of money from institutional value. One thing to note, if we were to pull up institutional holdings on NASDAQ, and we were going to, let's just say, jump into CTM and get an idea of what the institutional holdings look like recently, from a value perspective, where we see them in the market, they're in the right market as an AI company and working in software. But one thing to note, institutional ownership, while they are $100 million market cap, this is a very small company and there's risk. Institutional ownership is only at 7.5%. So there's actually a lot less risk from institutions selling at this point, because most companies have institutional ownership of 30% to 50% or more. And so at 7.5% institutional ownership and seeing more increased positions than decreased positions, there is what I would like to look at as potentially institutional attracting value rather than something that would be higher risk that institutions would sell. Does that make sense? Are you guys tracking? Does that make sense with what we're talking about with CTM? Like, the institutional ownership is low. It's at 7.5%. So there's not really a lot of, while it's a very low market cap, 100 million, and just $10 million will fluctuate the stock 10%. So that's obviously something, but does that make sense? Only about 7.5% are institutions. So not really as much downside risk from an institutional perspective right now. Now, you do see Vanguard adding to their position. State Street has some shares they're holding, as well as BlackRock there as well, and Citigroup. So we're kind of watching it closely. We're looking at this level around $1 a share, which they've bounced recently up to the 113, and looking to make this run up into 125 to $1.50. So that's why we have them here on the list as a top AI company to watch here. Sunday Stock Talk, we're getting ready for the markets. How are you guys doing? I see Johnny is here going long. Reminder says, should we increase position with CTM? I wouldn't say that you should do anything. Personally, if you want to know what I'm doing, I have long-term positions in CTM, but I don't have any short-term trades going, just more one that we're watching for this week to see if this move continues to play out, which could offer a nice margin for profit. Now, should you increase your position? Should you buy? Should you sell? That 100% is not what I'm here to share with you guys. I'm here to just give you the insights into what we find factually about these companies, what we know is true, and what we can find to be potentially things that would attract institutions or are indications that these stocks are undervalued, and that would mean that there's a higher probability for them to increase in value in the future. And that's really what we're all about. Hopefully that makes sense. Solana going to 300, AI says, that's cool. Yeah, I have Solana as well personally. We allocate personally, I don't know if it's helpful, but people like to know, positions and things like that. But my wife and I, we put about 50% of our cash over the last few years we put into crypto. So we have particularly just about Solana and Bitcoin, and we do have some ARB, which is a company that is a blockchain called Arbitrum that is helping Robinhood build out their tokenized stocks on the blockchain. So blockchain, stock market, but rather than like shares and SEC and everything else, which I'm sure it's still going to be regulated by SEC, it's actually on the blockchain for the verifiability of the shares, which I think is very innovative. And that's why that's a company, ARB, we hold as well. So again, support level at $1 a share. We've seen it hold pretty strong over the last month or so, 2 months really. And we're looking for that move for CTM potentially over the next few days. So as we mentioned, markets did make some highs that were greater than that of Thursday on Friday. So that indicates that we do see some upward momentum into this week. One thing to note as well is for AI companies we're covering, there's also this AI company that's most people haven't really heard much about, and they're more in robotics, and I would say the financials aren't really like as favorable as other companies we cover, and they're called Serve Robotics. Now, I actually have seen them all over the place here in Los Angeles, where we're visiting right now, a little bit in Miami as well. Some of you guys may have seen these robots that are on the street that deliver food for Uber. And so Serve Robotics is a company we also have on the list here. Serve Robotics doesn't have as favorable financials, but we do see them sell off and have some big spikes where they have previously maybe faced some manipulation, but it's because they're a pretty small market cap as well. So let's take a look at Serve Robotics and jump in a little bit. And feel free to comment any ticker symbols as we could go through them for AI companies, data center companies, robotics companies, any of that. We can definitely jump in and see what's really moving for this upcoming week. Good stuff, good stuff. How many of you guys have seen these robots on the streets? Anybody? Oh, okay. Jazz Jackson says Serve is in Atlanta as well. I didn't know they were in Atlanta. That's good to know. So Atlanta, major city, huge city. They have Serve Robotics as well. And so I like their tagline here. It's, why deliver 2-pound burritos in 2-ton cars? Meet Serve, the future of self-driving delivery. And you can see partners and investors include NVIDIA, Uber Eats, 7-Eleven, Delivery Hero, and many more. And delivering for Uber Eats is pretty awesome. We actually can even see that right now. If I go order food on my phone, pull up my phone, try and order a burrito, it will give me the option to have a robot deliver it. And it will say, you don't have to tip, but it might take longer, something like that. So the reason we like this as a play is because of the backing that they're currently having, but also one of the biggest indicators that we look at is real world usage. So we see them in person, we see them right now. And if you're going to use any indication of if a stock is good over the next 6 months, 18 months or more, or years from now, to be able to see them in real world market usage of identifying that they're here now, you can physically see them or touch them or what have you, that's a pretty good indicator. Now, where they come up short is definitely going to be over on the financial side of things. So if you go to their financials, they got $598 million market cap. Very small company for what their market opportunity is. So that's something to consider. The food delivery and the robotics delivery is growing very fast. It's expected just in robotics related to food delivery to grow to around $20 billion to $50 billion over the next 2 to 3 years. So with those ranges in mind, this company is at 600 million, but backed by Uber and Nvidia with their AI. It would make sense that they could potentially have a share in that market. Now, when it comes to the financials, this is where it doesn't look so pretty. And it might not look pretty, but it's also not as bad as it looks. You see that decreasing net income, like increasingly going negative. However, their revenue has been increasing quarter over quarter, and they almost cracked $1 million in revenue. And while their net income is negative, 10, 20 million negative is not huge for the type of startup that they're currently undergoing. Revenue's up 37% year over year. Net income's down. Balance sheet, as you could tell, they're not anywhere near going out of business or anything like that. They do have a good, healthy amount of cash and assets totaling over $214 million, with liabilities sitting at just about $7 million. So that's why we have them here. Now, when it comes to their stock and their price movements, they have sold off a little bit. They've had this little trend where they, at one point, were up to about $25 a share, and they're now down to about $10 a share. However, what we're seeing here from a value perspective is that they are seeing some trends going up here. You got this slow market cap build really from 2019, where they've started to see some more revenues. They are getting the real world usage, and you see them start to build this market cap and trend upward, and start to see that influx of institutional ownership kind of rushing in a little bit to serve robotics. So the ticker symbol is SERV. I really like the long-term play with them because I think they're in a really good market, and at $500 million market cap, they could definitely get up into that $1 billion to $5 billion valuation if they continue to develop the way that they're developing their business right now. So with that being said, that would put them around a $20 valuation on their stock price to potentially $40 or $100 a share. But right now, really, if they're going to target that $1 billion valuation once again, it would be around $20 a share. So medium term looks pretty good. I like some of these potential swings. Maybe seeing them get up into this $15 range to $20 would make a lot of sense. On the shorter term, they have had a little bit of a trend downward, and you could kind of see this kind of lower highs, and they've sold down from that $15 price point. They've kind of sold down, but they're trying to hold this overall kind of market cap build. They've started to see them get up into this $10 range. Looks like the nearest support level for them is going to be, for Serve Robotics, the price point of right here. So this is going to be kind of the level right here around $10 a share is kind of the nearest support level. We've seen them bounce a few times back in early August and into July, and that's where they currently bounced on Thursday. And then Friday, they saw some upticks, and you can actually see that they are getting a little momentum. Again, Friday ending higher than they did on Thursday, which indicates more of potentially a bullish trend in the near term for them. So when we're looking at the margins for profit, we're kind of looking at maybe near term about 9 to 10%, probably in this range up into this $11.25 range would make a lot of sense. All right, so there's a couple of comments. AI, I see you got quite a few comments there. If you would, it does help if you put it all in one text. That way I could kind of read it all a little bit easier. And I mean, if you want me to respond, or if you just want to conversate, I get that too. Okay, so Vladimir says you want them to drop to $9 again. Got it. Yeah, we could see that potentially. As we pointed out, they do have in the near term this kind of this downtrend playing into this, where they're trying to break out, trying to continue the uptrend and hold that $10 support. But they do have this trend here They've kind of been selling down since about June, and we're in the midway point between that trend where it looks like they're now finding a base and potentially making this run, that 10% swing. But we could potentially see that $9 price point. That's why I would watch that $10 support, because if they break that $10 support, really the momentum would indicate it's going to continue down, do something like this, sell into that $8.50 range, and continue this trend before reversing, and that might be where you look for your entry. But when it comes down to entries, exits, timing, one of the most important things to consider is what we could control is how we manage our process and the value. And if you're in a shorter term investment, really the clear thing you want to have is going to be not having some super fancy strategy, crazy indicators. You want to look at the probabilities, get them in your favor, but ultimately what you want to do is just control the discipline of things like your stop loss. So if that's at $10, that's what it is. Things like your take profit when you're where you're looking for the profit to get to, and maybe setting a stop loss if you get that increase in value. So really just keeping an eye on those levels is where we find is the thing that has allowed us to grow the fastest is having discipline in the process rather than trying to be perfect on the timing and everything else. So while we look at this, just to kind of give you an idea of the probability of the potential move that we're looking at. So hopefully that makes sense. Sky says, Richtech Robotics and BigBear.ai. That's a good one. We could take a look. Marty says, late to the party. Thanks for the great live streams. Thanks, Marty, for tuning in. I appreciate you. Thank you for tuning in. Grotiske says APLD to $6 soon with some very bullish outlook on, or at least a very cute face you got on your emoji. It sounds like you're excited. Are you shorting APLD? The data center company APLD? Because they're at $14 right now. All right, did you mean to write $16? Or are you actually just trolling? Let me know, dude. So when it comes down to the movements for this week, the next AI company we're going to be watching for sure is going to be BigBear.ai. So BigBear.ai, we do have some positions short term that we just entered into on Thursday. And we were looking for a potential reversal. We saw this downtrend really kick in after that temporary recovery after their earnings. This is an AI company that specializes in modeling and computations for large language models, whether it's for the US government with their Department of Defense contracts, it could be for the Pentagon or their Army contracts, or even they recently partnered with the Washington Commanders for something related to their stadium, which was kind of cool. But really where they focus is their TSA. I just took a video. I don't know if it's, maybe I could find it on my YouTube, because we did a community post a while back and I need to sign in, so I don't really know. But we just did a community post here. I could pull up the YouTube, where we were just at Denver International Airport earlier yesterday. And we, not Will Richard. I wasn't trying to search Will Richard, although that's what it's short for. We were trying to search a post we came out with yesterday where you can see BigBear.ai. There it is. BigBear.ai scanned my face, and I thought, hey, let me just snap a quick selfie. Didn't really think too much about it. I didn't know if I was going to post it or anything, but BigBear.ai is at Denver International Airport. They're at LAX, they're at Chicago, they're in JFK Airport, and we look at their biometrics, and essentially how it looks. It's this very scan picture that I just showed you, where what they did is I was walking through and they say, please hold still, we're going to scan your face, and they scan it, and it basically says, here's where this passenger's from, here's their name, here's where they're going, and that information is highly valuable for companies in the data center or data space, not data center space. Companies like TSA, which is government agency, Department of Defense, Homeland Security, as well as the data is also AI driven. So where are you coming from, where are you going? That's could be good for Delta. They're partnered with some major airlines as well at the airports. So why is that key? Well, they have their CEO who was previously in the U.S. Customs and Border Protection. So it makes sense that they get those partnerships. Now, right now, when we look at their financials, they're still lagging on revenue. So you got the $1.85 billion market cap. So in the defense space, comparable companies like one they're partnered with would be Palantir, but Palantir is doing a much larger scale and doing a lot more volume, like a massively more volume than BigBear. But the quarterly revenues, while they're down here, and you can see annually they're up about 2%, but quarterly they've been down about, they've been shrinking revenues a little bit because they just got the new CEO and they're still getting things together. So there's more risk right now in the stock after those recent earnings. But they did increase their assets massively. So they have runway. They're up to $600 million in assets, up about 440% year over year. So they do have the cash right now, and the institutional interest is big. You could see BlackRock investing more along with State Street, Charles Schwab. And part of the reason why, see, they're a higher institutional ownership at 33%. But part of the reason why is most likely because they have the World Cup coming up. You got 2026 FIFA World Cup, 2028 Olympics. And essentially they're saying, hey, our technology can get you better data. It's going to know more about who's coming in, who's going out. Work with us and we'll make sure you get that data. And so that's where their business is right now, as well as in the Panama Canal with some other AI stuff that analyzes ships that go in and out, and that's all AI driven. So when it comes to their stock, we do have a trade going. Long term, we have some investments. Average price around $2.80, invested back in December 2024. Started covering them around $1 a share back in October. So with that in place, what you got to consider is they're building market cap, but they are correcting down. You see this pressure, this downward pressure, and what we were looking at was a potential swing up after this consolidation. So 3 stages to a reversal. First, you got the initial trend. In this case, it's a downtrend. Then you got consolidation, and that does tip a little bit of probability towards what would be a reversal. A consolidation stage is the second stage, and the third stage would be going in the trend in the opposite direction. So we entered a trade. I don't know that it's really moved yet. It was on Thursday or Friday. Yeah, we're up about $67. It's a short-term trade, just about 700 something shares, and we're looking for this 10% swing that would be approximately about $400 to $700 profit in a shorter-term play. And stop loss basically right there around 475 at that support level is kind of where we're watching. So that's a trade we're in, and we'll be watching that AI company this week, see if we can potentially either add to our position or how we're going to manage risk or what that will turn into as the week progresses. So James says TSA or technical analysis on ASX. You can definitely take a look, James, for sure. We could do a quick little detour for a sec before we jump back into the next AI stock. Let me see what stock this is. ASX. Let's see. It is spiking, maybe. Let's see where it is. All right. So they've kind of been building an overall uptrend, it looks like. And they corrected with the greater market back in April with most companies. Now they're trying to continue this kind of uptrend they got going. Technical analysis. If you're seeing big dips as a result of, let's say, this dip back in April, we could probably discount it to some extent. There's definitely some extent to which you could discount a big overreaction or sell down, which would probably lead us to believe this is more of the trend and that the upside wouldn't be like up there as much. It would be more like down here. Okay, something like this. So it looks like they do have this overall uptrend, and they're starting to build out, looking to get from about $10.50 up into that $11.80 to $12 a share. They were up 5.64% just recently, and they are looking to continue that trend. Now, from a technical perspective, we could see that they were at a high back in June, 1286. Support and resistance wise, they do have some resistance that they're going to face where they're kind of at currently. Kind of see this previous support level area right here. You got a resistance, and then you also have this kind of support over here, support. So kind of a consolidation where they're going to face resistance up here around this $10, 50 cent, $11 range, which is where they are now. Another technical indicator you could potentially look at here is going to be, let's see. What do we have? Advanced. We could do some Fibonacci. Let's see. So from the top up to 1270, going down to 694 for this stock. And is this an AI stock? What company is this? Just get an idea. Their technology, Australian Securities, ASX stock. No, they're not. Are they? Market cap 22 billion, fairly large. Interesting. Yeah, this is an interesting one. So they're already a pretty large company. Fibonacci wise, down to 694, you go up to previous levels you'd be looking for, probably that high, I'm guessing, to get back up into this range. So indicating buy levels for this stock would be in this $9.50 to $10 a share, according to Fibonacci. If you're going to look at it from how institutions would look from, a Fibonacci perspective, I mean, that's kind of the level at which 0.618 is a buy, according to Fibonacci. Fibonacci also says it's a good trade if you're up here into this 0.058 or 0.0 or 0.5, and then a great trade would be in this blue, dark purple, and then the lighter up here would be an amazing trade. So what does the margin for profit look like there? Well, you have a nearest support level. Again, it's going to be probably around $9.50 to $10 a share, which is below where it's currently at. You'd be looking for a recovery. First recovery or push up would be into that $11.50 range to that $12.90 or $20 or $12 range. $12 range right there would be kind of where you're targeting. So, I mean, that's a full technical breakdown. You could do some more, but one thing to consider too when we're looking at this near-term chart and where things are going, you do have the RSI and MACD still kind of in the middle, so not really indicating a buy. More on the sell side on the near term, potentially, like we said, at support level at $10. Maybe you see a sell down there. Hopefully that's helpful for the technical side of things. I haven't really touched on that one much, but I don't know what they do, and I can't really give you a full novel breakdown of where they're at and where they're going from a fundamental perspective. So we're going to be traveling tomorrow. We're taking a trip. We're going to back to Northern California. So we're in LA right now. Got to go to a quantum conference. That was great. Got a free media pass because of here on YouTube. So thanks guys for all the support. Vladimir says APLD has their next earnings in under a month. That's good. Take a look there. And then, hey, what's going on? Sevilla, thanks for tuning in. James Neal says, thanks, appreciate the analysis. Of course, I'm glad it's helpful for you. So when it comes to this week, we were just looking at Stockmate. So in Stockmate, we got our live trading happening about 13 hours tomorrow morning. And we just came out with the targets for this week, along with when companies are reporting earnings. There actually are some notable companies in AI that you're going to want to get some more guidance, or at least we'll see some insights. For example, when AMD came out with way more revenue, or Microsoft came out with really good revenue, and we're seeing increased spending on AI, that really pushed the AI market further. We see that have a really big impact. Same thing is true right now with Oracle. You got Oracle is reporting earnings on Tuesday. So want to watch that Oracle report as they're reporting their after hours on Tuesday. And then we also have Adobe reporting after hours on Thursday there as well. So some stocks to watch there. and get some guidance for the greater market. Now we have targets for all of them, and we also have our live session on Monday, tomorrow morning. If you guys want all of that, you can get access in the second link below. We actually added lifetime access back. A lot of people are asking, Will, is that coming back? We just added it back. So I don't know how long it's going to be there, but we wanted to make the experience the best for everyone. So you can get lifetime access to the daily live trading now, as we updated it for you. Now, when it comes to the stages of value and stages of growth for this week, the other AI company that we're going to want to keep a close eye on for this week is most definitely going to be AMD. Now, AMD, as we've talked about a lot from our longer term positions that we have with the company, as well as some of the shorter term trading we do, they've stair-stepped up from the $75 price point back in April at the low of the market, as high as about 186 in August. They've pulled down recently and really sold off. See some red candlesticks down to the support level here at about $150 a share. Now, they're going to be looking to potentially bounce here. There's a couple reasons why we're going to watch them closely this week. With this big red sell-off, see them kick down to the support level. The nearest support is about 150, and that's where they are. So if it doesn't hold, we could be looking at a sell down into that 132 price range. But where they're at right now, we know they're partnered with Starlink. They're providing those semiconductors for the satellites, the satellite internet, which has been huge over there. They also are in data centers big time right now. They're expanding into data centers rapidly, and they also have had really good financials. Now, the PE ratio is a little high. You can see it's at 87, so they're trading still from a fair value perspective at a premium. But from a future value perspective and where AMD could go, we do see their semiconductors make a huge impact, their chips. Their chips have really driven revenue. Quarterly, they've been massively crushing it. It was just a year ago, and they've not doubled revenue, but more than half, more than 150% there in the revenue. Annually, their revenue's up 13% from 2024 or 2023 to 2024. But recently, if you look at where they're at, their net income is up 229%. So building data centers has been massively impactful, will continue to be really impactful for them. And they cut down on some of their gaming so they can focus more on the semiconductor and the data center approach rather than the gaming approach, which I thought was probably a good move for them. The balance sheet focusing on AI has proved to be well, as they've increased their balance sheet and their assets to 74 billion, and their total liabilities just 15 billion. So again, current market cap 245 billion, so they could be a little high right now, but for where they're going in the future, I like them. I got long-term positions, continue to hold there, and we'll just see if any sentiment kicks in, a nice bounce here, maybe start to see a recovery on AMD for a shorter-term trade as well for this upcoming week. Marty Clark says Adobe. Yeah, Adobe's going to be reporting this week. Just dropped that. Looks like Thursday after hours, Adobe will be reporting. We did have some, Marty, targets come out in Stockmate. I know you're a Stockmate, so you could always go check those too. We got some targets along with some different catalysts we uncovered for Adobe that would be good to know if you're considering it. Now, when it comes to the next AI company that we probably want to keep a close eye on for this week, there's a lot of big movers, right? We see Serve Robotics. You see robotics, you see software is big. Definitely seeing semiconductors get a lot of attention. But really, what's right in our face and what stock we've been trading recently is going to be Tesla. We've been watching Tesla for a while. We've been in this trade for about 2 months now, since beginning of July, where we're in a trade watching from about $300 a share on Tesla to potentially this $370 price range. It's about a 25% increase that we've been able to witness here on this continued uptrend. Now they're looking to potentially get into more of a hyperbull trend. Recently pushing up the RSI looks a little overbought. You can see it's kind of now looking on the overbought side. But from the shorter term perspective, if they don't get rejected here in this smaller trend that they have going for them, but they could continue this bigger trend up into this $400 range, that's about a 20% increase from here. So they're really looking at that. If that's on Tesla, a 20% increase. Over on TSLL, that's a 40% increase. So we also have done the same trade over on TSLL. And they're kind of it's the same trend because it's just mimicking the stock. But basically what that would look like on TSLL be something like this. Okay, so something like this. And you'd be looking for that same move on Tesla as they double down on AI, they double down on robotics, they double down on not so much the cars, but actually more towards the AI side of things. That margin for profit over here would be about a 40%. Again, a 40% increase if they continue in that direction. Now, that's going to be a swing trade. That's not going to be a shorter term day trade or anything like that. In fact, on the day trade side, you can see it does look a little overbought. We could see a sell down or something like that. But on the near term, kind of medium term potential, buy, hold for a couple days, unless it really spikes in one day and we're able to take profit or something like that. Most likely where it's targeting next would be up into that $19 range, or over on Tesla would be up into the $390, $400 range currently. So that's kind of the next target. So we're going to watch closely. Valuations wise, it's going to be really interesting to see how that robotics plays into their company. All right. AI says, watching GME. Yeah, I don't watch GME. Yeah, GameStop, meme stocks. We don't really do it. It's totally fine. I mean, if you want to invest in them, all power to you. All power to you. But when it comes to analysis, we're really looking for the companies that are bringing real world value to the marketplace in a way that's like showing signs of that they're in a really good part of the markets, that they are seeing real world usage and growing, and that financials look good. That's another thing that oftentimes doesn't show up in meme stocks, and that they are able to be in a position where fundamentals most likely are working in their favor, and that's kind of where we're looking at with just companies of integrity. Even for short-term trades, we like to line it up long-term. So the next AI stock I want to keep a close eye on too is going to be NVTS. This is Navitas Semiconductor, and they've kind of sold down. We were looking for this recent kind of sell down to continue potentially. They really sold even further and broken that previous support, and they've sold down even further, and they're selling down. But one thing to watch about this semiconductor company is not so much that they're delivering unprecedented value that we can't find anywhere else. It's more of a market play than anything else. Because when we look at their company, they're doing semiconductors, and you could see some of the focus they have for data center, for mobile, for electric vehicles. And I think this company has had a lot of questions about where they're going, where we could see them go in the near term. And one of the things we focus on is the press releases, what we know is true. I haven't seen any big articles come out from Navitas that indicates, a massive movement. It's been a lot of like articles. The other thing that is a little weary as well is that they have these 3D images of stuff, and they don't have like real world images. So I like to see real world images rather than just 3D generated stuff that they have there. And then when it comes to the market cap, they're 1.2 billion, revenues at 14 million. So this is kind of why I wanted to bring them up, because everybody's talking about them and asking me about it. I wouldn't invest in them personally. And the reason why is because of the revenue decreasing quarter over quarter. See that revenue decreasing. So 20 million down to 17, down to 14 in 2025 March. And then recently in the quarter, 14 million with net income negative. The balance sheet is good. They got 449 million in assets. So their balance sheet looks good, but we haven't seen the revenue kick in yet. So ideally they come in with good revenue in the next quarter, and they got the balance sheet, and then we start to pay attention to them. Right now they're not there, but that's why we have them on our radar, because the assets are looking good. It's just a matter of seeing the revenue catch up. And since it hasn't caught up, I don't have any positions. I wouldn't buy them now, but I bring them to your attention because a lot of people are asking me, hey, well, what can we do with the stock? What's going on with NVTS? And really, I like their technology. I like their market, but they're just not seeing the revenue kick in yet, which is why their market cap is there. And still actually looks a little overbought for the market cap. So on the technicals with this downtrend we're seeing, it's possible that they do find a support level here at what would be about $5.50. It's possible that's the next level of support. We see them continue back up into that $9 range. That's about an 80% increase. But where you see this slope and it's just selling down, it's possible the new trend looks something like this, and this just stretches down, and it could be very high risk because their revenue hasn't caught up. And it looks like something like this, where it sells down even further into this $3 range, which is a huge sell down, 40%. So for anyone that's looking for shorter term trades, things like that, I wouldn't really mind potentially trading it, because we'd have a clear plan for a stop loss and clear plan for where we would want it to go. But anything in the near term, let's say 6 months, 3 months, or even let's say a month or two, it does have a lot of risk, and I wouldn't touch it for that reason. So that is the other one that we had covered that people were wondering about. They said, hey, what's going on with this? I hadn't covered it really until a couple of weeks ago. Someone asked me about it. The other one that we keep getting questions on here is going to be from Skies. Guys, thanks for tuning in. This is going to be Richtech Robotics. So Richtech Robotics, we see them build their market cap up here. See some nice moves up into $2.50. The overall trend that we were kind of identifying before they broke out was something like this. There is this greater uptrend that you see develop with them, where they're building this market cap, and it looks something like this as well. Kind of trending upwards as well. And that's actually where they're at currently. Something like this. Okay. This is where it gets interesting. And we could see how they came in with their earnings, okay? But when we look at their company, they're going into the robotics space, which is AI robotics. Two things to note. First, these are prototypes. So how many are they selling, and how is the revenue? Well, when we look at the revenue, it hasn't been that good, just about $1 million per quarter with negative net income. Okay. The balance sheet is good. They got 107 million, but their market cap of 406 million, still not indicating growth with their current revenue. So they're very much a startup in the same sense as that other company, Serve Robotics, we checked out earlier. It says they're partnered with NVIDIA, which is the Connect program. Really interesting, because I went here to prove in a video that I could get in the Connect program, and I was able to join and apply and get accepted within about like 20 minutes. Okay. So this is something they advertise, we're part of this NVIDIA program, but I personally proved in a video, like you can go do that as an individual watching this video. You could go get that partnership with NVIDIA right now and then say, hey, we're partnered with NVIDIA. Does that make sense? So it's like, it's not actually as maybe valuable as it seems. Now, a lot of the images they use for their technology and their videos is pretty exciting. They talk about their, the AI that they're building, the robotics they're building, but we just haven't seen any of it catch up from the financial perspective. And so when you look at the news they have, they got a $4 million sales agreement in June. That could show up in their next earnings, and that might put them into a level of revenue that would be a little more favorable, but still not justifying that $400 million market cap. It's the same thing like NVTS. You could look at their market cap's at 1.2 billion, and they have brought in 14 million in the quarter. I mean, we were just looking at CTM. They brought in 14 million, and they're at $100 million market cap. So they're much more favorable investment. So Richtech Robotics, $406 million market cap, and they're bringing in about $1 million per quarter. Doesn't really justify the valuation unless you're buying what could be, because they're doing the robotics. So that's really what you're buying with this company if you decide to invest in it. What could be, and it's not really fundamentally sound from a financial perspective. It's not too sound right now. they're not at risk of like having a bankruptcy or anything like that. You can see their assets do outweigh their liabilities by 100 million. So they're totally fine. They're not at risk of any like going under, but they haven't seen revenue yet. So you are buying what could be when you're buying Richtech Robotics. Good stuff. So there's some great comments. There is some good different tune-ins from a lot of members here. How much do you think can run off of the Tesla partnership? I don't know, Marty. I haven't looked at that one. I'm not sure. And then you got Eric here. So the market had a nice recovery on Friday. We saw it really recover. We saw it get up after hours. And then leading up till tomorrow, you see Robinhood stocks up 8%. You see some stocks doing well, potentially continuing an uptrend, right? After seeing some sell-offs earlier in the week, then we see some market potential momentum. And some of the top stocks we'll be watching that we mentioned in this video, we'll be covering tomorrow at market open. So I am going to be traveling tomorrow and we're going to go back to Northern California, but we will be live at 6:30 a.m. Pacific Standard Time or at market open, whenever that is for you. If you want to get the targets for this week and all of the companies that we're watching along with the targets and join the StockMate community, there's over 25 individuals with a net worth of over $1 million. And also, our daily live trading is happening in just 13 hours. It's happening tomorrow at market open. So if you want to join us there, again, it's the second link in the description to get lifetime access. We'd love to see you there tuned on in. Feel free to have a look. Again, it's the second link below. Thanks so much for tuning in. Hit that like button if you enjoyed the video, guys. Do consider subscribing, and I'll see you in the